Hello everyone. In my today's video, I'm going to take you through the Q4 FY26 and the full year of FY26 results of Anand Rathi Share in Stockbrokers Limited. We're just going to go through both the Q4 as well as the FY26 numbers and just see how things are changing and things are getting better in the stockbroking industry. So if you look from the Q4 FY26 perspective, their revenue increased by almost 28% to 255 crores. EBITDA margin improved by almost 6.6% to 43.2. And if you look from the EBITDA numbers, right, it went up by almost 51% to 110 crores, and PAT was up by almost 125% to 41.5 crores. And if you look at the PAT margin also, right, it has improved drastically by 7% to 16.2%. So this is the Q4 numbers. Let's look at the FY26 number and see the difference, right? If you look at the whole year, the overall number might not look that exciting, especially in terms of the overall revenue, because the overall revenue grew only by around 10% to 932 crores, and EBITDA improved by around 21.9% to 379 crores, and PAT overall was up by only by around 25% to around 129 crores. And if you look at the PAT margin, it was up by around 1.6% to 13.8%. So why am I saying that we need to look at it differently, right? That was the overall full FY26 number, and we know that the from FY25 to FY26 we were going through the bear market, and we all know that the stock broking industry is a cyclical depending upon the capital market, so the things were not that good. So but if we see from the Q4 FY26 numbers, things are looking great because revenue is up by almost 28%, EBITDA margin is up by 50, EBITDA is up by almost 51.4%, PAT is up by almost 125%, and PAT margin is improved by 16.2%. So things are looking good, which shows that we possibly we are getting out of the bear market and heading towards the bull market. And if we look at the numbers further, right, if we especially look at their overall client quality and engagement, right, so the total number of clients have almost reached to 1 million, which is a growth of almost 12.7% YOY. And in terms of retention, or how to say loyalty toward of the clients, right, almost 55% of the client have remained with this firm for over 3 years, and almost 83% of their base is over 30 years of age. So generally it's mostly the how would I say age group which is more matured, which are with Anand Rathi. And if you look at the geographic reach of their clients, that majority of their clients are from tier 2 and tier 3 cities, which account to almost 70% of their overall revenue. And the other thing what the business is doing is, right, because see, as I said, stockbroking industry is a cyclical industry depending upon how the capital, overall capital market is doing. So what the company is trying to do, right, they're trying to reduce their dependence on the overall broking revenue. Because if you look at their number, right, so the overall broking revenue dropped to 51% of the total revenue in FY26 from 60% in FY25. And if you look at their non-broking growth, right, which comes from interest on margin trading facility and distribution income, it has grown by almost 28%. So this shows like they want to diversify their income and not complete, I mean, how to say, reduce the impact of capital market cycle. And the new revenue stream which has started from July 2025 is, right, they started the distribution model by acquiring an insurance corporate agency. And if you look at the other part of the business side, which they are trying to grow, is MTF, which is margin trading facility. It's nothing where, I mean, how this business works is, right, the broker, like for example, I am a trader and I want to buy the shares, but I do not have the whole money. So I give only 25% of the money, and the remaining 75% is given to me by the broker, where they charge an interest to me. And this is a high margin business. So what Anand Rathi is doing, right, they are increasing this book. Because if you look at the overall MTF book, right, it grew by almost 60.7% YOY to almost 1,101 crores. And the interest income of from this book also rose by almost 32% to YOY. So that is also a good sign, because this MTF business is a high margin business, which will increase the overall, how to say, the overall margin profile of the business. And what they're trying to do is, and especially even though, and obviously it's a risky business, right, because they are lending the money and they might not get the money, and if the overall value of the shares which the client has pledged reduces, it will impact the business. But if their book is well diversified, there is no single client bucket size which, where they have the biggest exposure. And the other thing, if we look at their overall income statement, if we see, as I said in the broking statement, right, the basic bread and butter is fees and commission. If you look in Q4 of FY25, their revenue was all around 1000, sorry, 116 crores. But if we see for this Q4, it has gone up by almost 70%. And the interest income, which comes from this margin trading facility, right, has gone up by almost 44%. They had around 83 crores last year. Now it has gone up to around 120 crores for this year. So this clearly shows that they are concentrating on this MTF business to diversify their overall lending. And obviously, if the fees and commission income are increasing for a broking business, so that means things are changing. That means more people are trading, more people are coming into the market, and which shows a good sign that the things are changing in the market. So let's see how how Anand Rathi does in the coming quarters and the coming years. Because if the market is booming, right, and the bull market comes, right, it will by default help the stockbroking company because more and more people will trade. And if this happens and Anand Rathi is able to capture those clients and get ahead, right, it will be a good year for all the shareholders for this company. And if you like this video, please do subscribe to my channel. Thank you and God bless you.